Hi, everyone. Joe Montana reaching out to you from the retirement team at CCR Wealth Management. Just reaching out with some thoughts on recession, a topic that's been in the news quite a bit lately, something that's maybe on many of our minds. We thought it might be helpful to just talk a bit about what a potential recession would mean for each of us as individuals and what we can do to prepare for it. First of all, let's get clear about what a recession is. I think here we can forego the technical definitions of a recession and just think about how it looks and feels to us as we experience it. Things like rising unemployment, something that we've seen over the last several months, unfortunately. Declining consumer confidence, meaning that people just feel less confident about their prospects, their employment. They start to tighten their belts, start to spend less. Just a declining amount of economic activity in general. And this usually comes with a declining stock market as well. Well, these times can be painful. The good news is recessions are relatively short-lived. Here we can see we've had 10 recessions over the last 70 years or so. On average, they've lasted just 11 months. And overall, we spent about 85% of our time in expansion and growth mode and only about 15% of our time in recession. Looking at it visually here, you see that those periods of growth are powerful. We make a lot of progress as society in those good times. When it comes to investing and growing your nest egg for retirement, this is also where we make all of our progress. Remember, you can only participate in that upside and that growth if you stay in the game and you stay invested. So, again, it's very important to avoid that temptation to try to time the markets during these slowdowns. And it's important to just, have faith that the good times will return and that they'll be powerful enough to get us where we need to be eventually. Remember that U.S. stocks over the last 100 years have returned about 10% on average annually. But it's also important to remember that that doesn't come in equal increments. And the only way you can achieve that return is to stay in the game through those good times and bad times. So we'd encourage you to think about recessions as a necessary part of the business cycle. They serve a purpose in terms of clearing out imbalances in the system and setting the stage for that next period of powerful growth. Nonetheless, there are some things we can do to prepare ourselves so that we're better situated to come through the next recession. One thing we think is super important is building up an emergency fund. Here you'd have ideally 3 to 6 months of living expenses you can fall back on if you were to lose your income. But we'd also encourage you to just start wherever you are. If you don't have any savings, maybe you can set the goal to start putting aside $25 a week for that purpose. If you have some savings, maybe you can set the goal of, doubling that over the next few months. This is also a great time to check on your spending and debt levels. Just get real clear about what's going out the door each month. Are there things that you're paying for each month that you don't use or that don't bring much value to your life that you could pull back on? In terms of debt, we'd really encourage you to make a list of the debts you owe and make sure you understand exactly what you're paying in terms of interest on each of those debts. Keeping in mind that right now we have historically low interest rates. So another thing to keep in mind, does it make sense to refinance your mortgage? Maybe find a way to lower your monthly payment there. If you have consumer debt, does it make sense to move that to another bank, find a better situation in terms of the interest payments? And perhaps more important than all these things, maintaining your regular investments, particularly when it comes to the 401k and your automated investments. Recessions don't feel good. They're painful to go through, but the truth is it's those periods of time when the economy is under pressure and the outlook isn't real great that you're going to have better opportunities to buy your investments at lower prices. So take advantage of the market when it pulls back during these times and just steadily invest through it. Hopefully you find those thoughts helpful. As always, please reach out to our team if we can be of any assistance. We are always more than happy to set up a 10 or 15-minute individual call with you to review your retirement and make sure you're on track for the retirement you want. You'll see our contact information there. Thank you all so much, and we'll look forward to catching up with you soon. Bye-bye.